Hi, and welcome back to yet another exciting episode in Robin School of It. In this episode, I just did nothing. I did a SWOT analysis of Nifty. What is SWOT, Robin? SWOT is nothing but strength, weakness, opportunity, and threat. So, what do you do with SWOT? And this analysis I've done on nine. This analysis will keep on changing, though at not a rapid scale. So, in this video, we'll try to answer this question: which all sectors we can put money? Robin, our portfolio is already down. You're asking to put money, yes? So this is the right time to invest. Is it the right time to invest? And if at all, which are the sectors we can put our hard earned? Together, I think we shall enjoy this video. So let's get started. So let's find out what is there in this SWOT analysis. Uh, the first chart is nothing. I just plotted Nifty for a bank Nifty. You can see Nifty and bank Nifty, they go head and on. In my previous video, if you can recall, the Nifty Bank Nifty has 88% correlation. Rather, Bank Nifty has 88% correlation with Nifty. IT has taken a huge beating. If you see from 44K, it has tumbled to 32. So almost in the vicinity of 48% drop in IT sector. Pharma sector, we're expecting a move because thanks to this Trump Liberation Day, 27% episode got solved. Number one, pharma is exempted from this trade warfare. So it was expected to bounce back, but today it fizzled out. FMCG is considered to be a defensive sector. It's giving fantastic growth. We just do a simply, we plot this particular, just making, it is making some sort of pattern. So it is making some sort of U bottom kind of thing. So if they sustain this particular X, can get this by X amount. So pharma is a sector where we can put money. Robin, which all stocks are we going to put money? Yes, this question, this answer, we'll try to answer this question when we get deep into the video. Financial sector, it's nothing, it's typically, we just put, just take this image and take this graph, you'll find these are nothing but superimposed of bank. So let's get started and see how do we fare. The first chart is of Bank Nifty. So Bank Nifty, you can see it has, though it bounced over the last 2 days, it's come down to a halt thanks to 104% tariff given by Trump. So all the episode is thanks to the Liberation Day. From there, it's happening. And before the Liberation Day or 12th, second of this particular month, we are made a video. It's there in YouTube and it's there in my Facebook. Also find out the market will tumble. It tumbled a lot. One thing I want to show over here, if you see, whenever you see a fall or rise, Nifty will give some sort of pattern methodology. If you see this particular pattern, it's given some sort of M pattern. This fall is also given as some sort of M pattern. This fall is also given as some sort of so pattern. Bank Nifty behaves pretty. When it rises, gives a lovely W bottom. So, and in this particular range wasn't range. So people, our students made money by looking at a simple analysis. So trend line also plays a vital role when we do analysis. This is quite interesting. When I plotted Nifty in monthly time frame, if you recall, in 2019 and 2020, we had a COVID. The bank indices tumbled. So what is the difference with this fall and this fall, today's fall? In this fall, the VIX was tottering the vicinity of 80. And this particular fall, you can find out it has a very strong support at 22,400 and steep resistance is 24K and plus minus 10% for the week. So, is it right time to buy Robin? No, if you go by Elliott wave, it's very harsh to find out what is a corrective wave and how much is a correction wave. But prima facie, if you look, we are we fave number 3. So there will be small correction, then has to bounce back. Now let's study this. Now we go to IT indices. IT indices doesn't, while it was falling, it didn't make some sort of pattern. It was a lovely V-shaped recovery, rather V-shaped fall. And for last 2 trading sessions, it has tried to touch all-time low and bounce back. So IT has given a huge fall, right? From 46K precisely, it's tumbled to 31. So more than 50% correction. IT is still. Is it right time to buy Robin? If you're aggressive buyer, you can buy in staggered away. 25, 25, 25. And if you're a very conservative buyer, we need some signal. So IT is not giving any sort of signal as of now to buy. Let's go next sector. This is a pharma sector, as I told you. This sector we are expecting to bounce back. This sector we was supposed to uh, hold the Nifty as of now. But last two trading sessions, three things we get given a huge bounce back. If you see today, it was in some sort of doji because of thanks to Mr. Trump again, 404% tariff warfare to China. Now let's go to this is finance sector. I told you if you just put bank Nifty and finance sector, it will go mirror image. This is or it will be superimposed. So nothing rocket science into it. This is quite a scary sector, metal sector. Metal has taken a huge beating of last this strong warfare, right from 9,000 is tumbled to 78 kind of thing. So almost basically 15% indices are corrected. Stock specific, you go JSW Steel, Tata Steel, SAIL, they're taking a huge beating, right from 152 is starting in the vicinity of 127. I'm talking Tata Steel. Is it right time to buy, Robin? If you ask me honestly, this is the time to buy, but buy in staggered way. But as of now, we can't negate the fact this sector will not fall. If you are buying also, we have to buy in staggered way, 25, 25, 25%, right? 4 times. Why I'm saying staggered way? Because we don't know how much is going to fall. Number one. Number two, haven't got any sort of indicator which is saying there can be rallied up such. So if you want to buy also, you have to do a small homework, which are the companies which are export to foreign countries. So there, the trade warfare will come into practices. Now, this is quite an interesting topic. So, I mean, till now you're speaking, will not buy, will not buy. But what about this? Now, if you say this particular sector, what a lovely this bounce back is given the FMCG sector. So, in this video, we'll try to find out which of the stocks we can buy for a quick run of money or for long-term perspective also. So FMCG, if you see all the charts, among this chart, let's do a small thing. Let's go to the first chart. So this chart looks much more aggressive, beautiful as compared to other indices. Hence, this video I have dedicated to FMCG sector also. Now, I did nothing. I simply plotted the indices, that is FMCG X, followed by ITC, the market leader as per market capitalization, followed by Hindustan Unilever, followed by Tata Products, Marico, and Dabur. Now, if you see in this particular, if you see this chart, the mother index has a superimpose of Hindustan Unilever. So, Hindustan Unilever did sustain this particular gap. There's one can negate the fact that the headroom is in the vicinity of 25K, or maybe that is the headroom we are looking at. So we can see a vicinity of almost 7-8% in those only. Now, what about ITC? ITC, if you see, this is the gap. The gap is there. So we need a closing at 420 and above. If ITC sustains a closing of 420 and above, then one can't negate the fact that it has headroom till 450, then followed by 470. If it holds 480 and 5, ITC we are it has already gone away from the ITC hotels. So balance sheet looks pretty clean as of now, right? Plus, very strong season coming in. So this quarter and the following next quarter, I think it has historically has been very, very strong for ITC. Tata Consumer got a lovely stock, 1025 and 11K. So this is done for almost 1 day. Again, there's 4 and 2 days. So within a span of 3 to 4 days, would have provided 16%. But the headroom is still, until unless we get a strong closing of 11,000 and above, it doesn't make sense to enter. Marico too is a surprise. Marico was, I think, is done an absolute mirror image of the assets. It has hold out. It is making all-time high, not all-time high, in the high in this particular time frame only. So Dabur is a stock which has not moved as compared to the assets. So there are two stocks where we find a huge headroom. One is Dabur. Dabur is starting in vicinity of 465. And we can see a minimum headroom till 520. This is where Dabur we can see. So in FMCG sector, all stocks are not aggressive. So two stocks which are, since I bring this video on 9th of April 25. So there are two stocks we can do a benchmark or keep in a watch list. One is ITC. You need a strong closing at 420 and above. With a timid stop loss, one can use minimum 10%, 15% upsurge, followed by a downward. So this is what we can make as of now in this the data which I've got till 9th of April based on Indian market. Right. Guys, I'm sure you must have enjoyed the video. If you enjoyed the video, do subscribe to my channel and hit the bell icon. So whatever video I'm making comes to you. If you have any questions, anything which is you're saying you want to differ from this, do call me or write to me. It will be a privilege to serve. Thank you.